How's it, guys? Welcome back to FX Rhapsody. Today we're doing analysis on two currency pairs. It's going to be the USD Japanese yen and then also the Euro USD dollar. Before we hit the charts, just go visit my website. It's on the bottom left corner over here. The link will also be in the description, where you can find some previous analysis, some previous strategies. For those of you that's getting started in trading, there's some nice video categories that you can view on the website that will get you into your trading career. And then also preferred brokers, guys, these guys are brilliant. I mean, when you're starting out on trading and when you trade, you need a reliable broker behind your side. And just go visit them out and just go check them. And also COT reports. We're doing top-down analysis on when we do, analysis starting from the daily down to the hourly time frame. And we're using the COT reports as confirmation. And on the resource tab, you can download that COT report for free, which I update every week. So let us hit the charts. We're starting off on the USD JPY. Okay, we're starting out on the daily time frame, and then we're going to move our way down to the hourly time frame. So on a daily time frame, you can see that there was this block area that I was highlighting, and looking at, and you can see that continuation. Just zooming in a little bit. There's some nice continuation upwards, and we do expect that, as the Japanese yen is very weak at the moment, and according to analysts, we will see more rise in the in the USD JPY. The Japanese yen will get weaker towards the end of the year, and we do not see or expect any retracement or any turn to a bearish movement downwards. So continuation upwards is a definite. So we will be always looking at some nice buy opportunities if you are trading using or doing swing trading on this currency pair. But you can see that nice break upwards. Moving down to our 4 hourly time frame. Yeah, let's just have a look at what's happened here. That is going to be at a later stage, just taking that out. So on the 4 hour time frame, what we saw is this nice break over here. We just looked at that on the daily time frame, but I mean, you can see that nicely and clearly. And with that break, obviously you do have a nice little entry that you could have taken, via this fair value gap that was created in the market right about there. There's an imbalance in the market, that long push in the candle, price is going up and then coming back down again straight into that fair value gap area, and then from there on, price just started pushing upwards. And if you did take that nice little buy opportunity, you would have had a 200 pip up movement in that buy. Moving on to 1 hour time frame, let us have a look. So at the end of every analysis that I do, I just highlight a little area in the market that we can earmark or look at, and just want to do that. There we go. So that was basically our previous analysis. Excuse me, ended off on that. And we were looking at any break of structure, and then obviously you could see that price started moving up, breaking upwards, and then all you need to do is I've got two methods of trading. It's going to be fair value gap, looking for any imbalances in the market, or I'm using my Fibonacci. So in this case, a nice little Fibonacci move from this price breaking above that area, coming down back again, and then started moving up. So this is nice, a little swing low. And then I just want to show you something. So you've got a swing low over here, and then you have a little bit of a swing high. Now price consolidating downwards, or just consolidating, just ranging in that little area and not making a big movement downwards. So not making a nice little swing low. So, and then price making another little high. So then I just move my Fibonacci upwards, okay, to that next swing high, okay. A lot of guys don't do that. A lot of guys just, take that as a swing, and then taking this as a swing low and then swing high. But I mean, you just move your Fibonacci, because if you go on a higher time frame, you can see a better, clearer view of that, swing low and swing high, because lower time frames gives lots of noise. So you must always remember that. So as you can see, we have a swing low, then price consolidating, ranging a little bit, and then creating a little bit of a higher high basically there, and then coming back and retracing back nicely to our 62% area, which is right about there. And as you can see, a perfect entry, price going there, and then that is exactly where you take your trade, and then price just started shooting up, just minimizing it a little bit, and you can see price moving upwards. If you did miss that opportunity, okay, that was our Fibonacci area. If you did miss that opportunity, you would have had a nice little area over here. Okay, so after that consolidation, right, price broke structure. So it created a little bit of a structure, and then with that big push candle here, this is the structure that's been broken, and that caused a imbalance in the market, meaning that's a fair value gap in the market. Okay, so that gap is going to be between those two candles, as you can see. So that's the big push candle. We're always looking for, if there's any imbalance, we always look for a nice big candle, and this is a nice big bearish candle, pushing it upwards. Zooming in, you can see you take your you make your little block, your fair value block from the previous candle's high to the next candle's low, and that's the area that we're looking at placing our trade when price gets into that area. And as you can see, price moving nicely into that area with that little candle there, and that's the trigger for your buy opportunity, and that is when price started shooting up. So again, two methods of trading that I use, and both methods yielded a nice little buy setup for the USDJPY in the hourly time frame this week. So as you can see, price started moving up and going up. So now what we're looking at this week is, again, this is going to be a very small little area that we're going to be focusing on. Seeing that, you know, we had a nice big push in the market. Okay, so I did say that we're not expecting any sell opportunities if you are a swing trader for any bearish movement downwards. But remember, on lower time frames, even if it is a buying market, you can still have selling opportunities for retracements. Okay, you can still make your pips by selling in a buying market or buying in a selling market, depending on the time frame that you trade. Always remember that. So there's a lot of guys, a lot of times that I would say that there's a nice sell opportunity, and people will comment and say, no, this is a buy market and all that. But always remember, it depends on your trading style. It depends on your what you want to achieve on a daily basis and the pips you want to make. Okay, so there's always opportunities when it comes to trading. So we're going to be focusing on these two areas in the market, and see if price breaks below this area, we're going to be looking at any retracements, fair value gaps, or above it for continuation upwards. Okay, so those two methods I'm going to be using when price breaks those two areas in the market, that high and that low. We're looking at the COT reports. We're going to be looking at, obviously, the JPY, the Japanese yen. So, you know, it's with the COT reports, there's a lot of up and down movements. So this week we could see a lot of longs being opened in the market and some shorts being closed. There might be that opportunity, like I was just saying, that there is a retracement that's going to happen, especially after a nice bullish run like that. We always see retracements happening. Okay, there's always going to be areas in the market that you're going to be retracing back to. Always, always, always. So there's always going to be opportunity for selling in a buying market. Remember that. Okay, let's move on to our next currency pair. We're going to be looking at the EURUSD. Okay, and then we're going to be starting off on the daily time frame. Okay, so daily time frame, EURUSD. Okay, what we can see is a nice little downwards movement once again. So we do have a nice trend line that the euro is following. Okay, there's a nice downwards movement, and as you can see, this trend line being respected multiple times. Okay, so if you take the high and the low of this movement, so there's a swing high and there's a swing low, price retracing all the way to the 62% area. There's nice two confirmations. Okay, you have the trend line that's been respected in the market, and then also you have the retracement to the 62% area. So that is a nice opportunity to sell. Okay, so if you had to sell in that area, you would have been, you know, 300 pips in the pocket with that nice little opportunity there. So daily time frame, again, you know, price just not taking out that low and still hovering over here. So let's go to the 4-hour time frame. Let's have a look at what price did. because we saw that nice sell opportunity that we just had on the daily time frame. Now let's have a look here. So just zooming in a little bit. There we go. So we had this nice little area over here that was broken. Okay, that's a previous structure in the market. So then price consolidated in this area. Then it formed a low. Okay, price going down, coming back up again. So let's take that high and let's take that swing low over here. Okay, swing high, swing low, price retracing to the 62% area. Okay, not a big sell opportunity. Okay, but again, if you were in that sell, or if you did take that sell and you rode it all the way to here, let's have a look here. I'm just gonna make that because that's the area that we'll be focusing on. Okay, so if you did ride it all the way down there, that would have been a nice 100 odd pip sell opportunity. Okay, so yes, there's always opportunities in the market. Okay, on our daily time frame, we saw a nice sell using the Fibonacci. On the 4-hour time frame, a tighter sell opportunity, smaller one, but again, you know, there's opportunities in the market. Price going up again, retracing back, and then now focusing, or now we can see price just coming back to that level, because there was a nice support area excuse me, on the 4-hour time frame. A nice resistance area in the market, price breaking that area, coming back. Now it's on that area once again. So that resistance turned into a support area in the market. Okay, so now we want to see what price is going to be doing. Is price going to break that area, continue downwards, or is price going to respect that area and just hover there a little bit and then start moving upwards? Okay, but again, time will tell. So we will have to see it, what price is doing. As you can see, nice, okay, a lot of ranging in the market this week on the 1-hour time frame. Yes, there's a lot of opportunities. There were previous opportunities in the lower time frames as well. Okay, but now we're going to be focusing on this. And like I said, I want to see price breaking either that area, or I'm going to be highlighting this low area over here, because this is the area that price is, you know, bouncing off right there. Okay, that's the support area, or that's the low of that support area. So if there's going to be continuation downwards, I want to see that area being broken. And if there's continuation upwards, and obviously we want to see that area being broken at the market. So those are the two areas that we can be focusing on. Looking at the COT reports, we're looking at the euro. Let's just go up here. There we go. So on the euro side of things, we also see, you know, longs being closed in the market, shorts being opened, you know, so it's going to be interesting to see what the price is going to be doing this week. Okay. COT reports is very nice indication. Don't use it on a lower time frame. If you are just trading on lower time frames, you're intraday trader, you know, don't just hover around the COT reports, because the COT report is there for a longer term trading. Okay, that has been used for nice swing trading. It's just to get that information about where price might be heading. Remember, this is big banks, big institutes that that the numbers are coming from. Okay, so those are the guys driving it. And you know, for guys that is definitely trading long term, it's a good indication. But COT reports is there for confirmation of any big turns in the market, or a continuation in that same direction in flow. Okay, so just remember that. So guys, that's all from my side. I hope you enjoyed this analysis, and if you did, don't forget to hit that like button, you know, show some super thanks, subscribe to my channel, hit that notification bell. There's definitely more videos coming your way this weekend. So guys, I hope you've been having a wonderful week, a wonderful weekend. Stay safe and happy trading, guys.